Hey, welcome traders. Hey, we're going to do our Monday update. This is Greg again. I've been trying to put these out every Monday. Again, I do these for free. I don't really get anything out of them other than I draw the charts regardless. And anyway, so I do like sharing them because I do put a little bit of time into them. That being said, if you're watching this on TradingView, please give it a boost so you can see who's watching. All right, I don't see who, but if anybody cares. And then also, if you do find this on my YouTube site, which links, believe it or not, from TradingView, so it'll be on both. If you don't mind liking and subscribing, that helps me. I don't make any money or anything on any of this, but it helps me know that people are interested and if it's worth my time. It actually does take a lot of time to produce these. That being said, let's jump right into it. Today, I've got up and we generally start with a larger time frame. I've got up the SPY monthly. I will say last week we had a lot of data drop. This week we do have a lot of data drop. We'll touch on some of that quickly. But let's just start off with the technical analysis. Again, we generally start with a monthly and then work back down to like a 5-minute time frame. Sometimes we skip the 5 minutes because this isn't a daily video, it's more of a weekly. Just as a quick reminder, the white channel is a pre-COVID channel. So I'm tracking that because really I'd like to get back into there where it's more of a normal, PE, forward PE, blah, 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 in a normal range. You can see I've even labeled this a blow off top. And obviously this is basically since 2022. This is January 3rd, it looks like. So the end of the blow off top. And we've had nothing but a rough 2022. We had a nice big bar, green bar in January. Everybody got excited about it and thought the bear market rally's over. I wish it was true. I don't know yet. Anyway, you can see we're not back into the trend by any means. Another thing I'll point on here is I do keep just a one moving average on here I like. So it's the 50 period. So one thing I will point out is we are pulling this blue 50 period moving average on the month up, and that's hard to move it because it's such a large time frame. As far as the other thing I have on here that I don't remember if I had this last week, I don't think so, is I actually did do a fib from the lows down here during COVID to the highs during the end of 2021, frankly, when we thought everything was going to be super great. Actually, maybe we all didn't think that, but it felt good when you had stocks and this happened. Unfortunately, not all of us did because we thought it wasn't going to do that. We thought it was going to do this, which it finally did. So timing, the hardest part, right? So one thing I did when we were talking about this fib that I threw on here, and I got rid of the shading just so it would be a little bit easier to see. One thing I'll point out is this October, remember October when we hit our low? If you look at the bottom of that wick, man, that is bouncing off of this 50% fib retracement, which is a common place to bounce. So again, on a technical, that's a bit bullish. I like it to see it all the way down to the 61.8% retracement. We haven't hit that, so I have some skepticism. And also the momentum indicators aren't looking great. We have been, and I mentioned this last week, we did start to see, a bit of an uptick here in the last, how long has that been? Since September. That's probably just being pulled up by, we've had a couple nice months. We are seeing the MACD indicators the MACD is starting to close in on that signal. So if we see that cross, the golden cross, I believe they call that, and this continues, maybe we can get some legs behind a rally. From there, I'm going to switch over. Remember, you're going to lose even though it's cool how I can fade myself in and out. I wonder if I can move it. No. You're going to lose my image. Not that I'm a pretty guy to look at anyway. I've got like the cleanest dirty shirt on in my closet because it's another snow day here in Wisconsin. We've had a lot of bad inclement weather. I've been plowing a lot, so I'm a little behind too on some of the stock market news, but I'm going to do my best. So let's jump down into a weekly. I did a very similar thing with the weekly. I keep this channel that I like to have, and then we got this blow off top. So it's more of a zoomed in of the monthly. A lot of the I'm looking for new patterns on different time frames. And one thing is obvious, we got a megaphone pattern going down here. Here's our low in October. So oddly, I thought this would go into this trend and this would extend, and it didn't. So it's almost like, and a lot of people say this has to do with different gamma levels and some other um, market maker stuff, where they position and hedge and things like that. But we've got a lot of strength around here, 360 range. We've had a lot around 390, and then obviously when we got close to our 50% retracement, we were 340s. I wish I would have bought a lot then. Now that being said, a lot of people telling me, no, don't wish that. It's going to go lower. Okay, so let's talk about that part on a weekly again. So each one of these bars are weekly. This is this week's current activity because today has opened already, so Monday started. This is all of last week's. Okay, so obviously we had we had a very bearish week last week. We did pull back off the bottom wick, so it did bounce again. That's pretty close to that 618 when I do a retracement just from the recent run up in January. Now, that's not the one we looked at on the monthly. That would go all the way back to here. But if you look at just the run up in January, I hear people saying this is just a pullback and everybody's getting scared. So I thought I'd look at it as maybe that. I'm an open-minded guy. And it does look like it came pretty close to 618. Not exactly, but it also bounced off the trend line here. So is this a throw over retest and a bounce? It could be. I'm going to delete this fib extension here, but because I also wanted to point out, since the beginning of the year, I've done an anchored VWAP, which generally, if you were to buy where I anchor it, if you're above the anchored VWAP, you're in the money. If you're below it, you're losing money, right? So if I anchored at the beginning of the year, and we haven't had, I shouldn't say the beginning of the year, beginning of 2022, wasn't it? Yeah. So the beginning of last year, obviously this has been a downtrend since, and almost everybody's under. Now we had some, we jumped over it, retested it, gapped back under this anchored VWAP, and now we're making another run at it. So we've got a lot of business going on in here where we're testing and retesting trend lines, fib extensions. Let's see if I can get that back. Yeah, fib stuff. And then just some strength. And I had some other guys showing me stuff like supply zones and things like that I'm just not versed enough to talk in this video about, but also some more interesting things. So we might just continue to see chop here is what I'm starting to wonder. I'd like to go bull. I want to be a bull. I want to be a bull, but I have to be realistic and check that at the door. And if the trend is down right now, that's just the fact of it. You can look. I don't know why sometimes the scaling looks wrong. Let me just jump out of SPY and back in it. No, I guess that's the way it is. So on a weekly, really, we don't have a whole lot going on the RSI. It's right at the the moving average. Now the MACD, we do have crossing above. Now remember, when we look at that monthly, I'm going to bounce back to that quick. It does look like it's turning. So if this turns and our weekly stays above the signal, or the histogram, and we get the MACD above the signal, again, maybe this is a bounce. Again, that's just based on technicals. We can talk about fundamentals, and that's just a scary topic to me. I'm going to move over to the daily quick. On the daily, same thing. I'll zoom out because this is an ugly chart. This is my working chart, but you can see I still use this channel even on the daily. I notate all the Powell howls, which is the FOMC meetings and the reactions. And so on this daily, what I notice, oops, I'm still stuck in drawing mode. Again, it doesn't seem to be. I've been having trouble with trading view, and sometimes it just seems slow, but it doesn't seem to want to scale properly sometimes. Anyway, so if we look at the daily, each one of these is a day. Obviously today we gapped up, right? And actually I'm going to throw something on here, because whenever we have a gap, what I like to do is I'll throw a notation on there, because we all know gaps are magnetic, and say lower gap, because there's a good chance we're going to come back and revisit that. It's hard to see. I got too much going on in this chart. Um, that's the next Powell howl. Also, the other thing is here I am circling this 618 again. Look familiar? Look where we're at. Yada, yada, yada. I'm going to erase those off because I don't. That was just for demonstration purposes. But that's where we're heading. Or it looks like it to me. So that's the daily. One thing I did want to do, and I don't normally get into the 5 minutes much, but I'll do it quick just because there was a lot of data last week. If we look at last week, we didn't have anything. On Monday, I think we were off, right? So Tuesday we had flash PMI. So let's look at that. Let's scale. So when flash PMI came out, sell off, which kind of surprised me. I mean, I don't expect this much market action on a flash PMI. The FOMC minutes. Now we have seen crazy things. So Wednesday we got that. Let's take a look at what happened there. Oops, that's a tool somebody else tell you more about. So we get into Tuesday. That's this day. Oh, FMC minutes. Oops. So those didn't turn out so good. What do we got next on the calendar? Then we had jobless claims. GDP we had our weekly GDP announcement, which we get another one today, by the way. But then at least it looks like to me this looks like a gap fill, but this might be today's gap, honestly. So it's just you start seeing patterns, right? I see patterns. Anyway, it just looks like there was a destination in mind and it got bought back up. And this is the 23rd, which is a Thursday. So other than that, we get jump into the big stuff, right? Fridays, PCE, big news. Of course, I was out plowing all day. So PCE, I think I have that on the wrong time, right there. PCE came out on that day. And oddly, that's the one I expected to do the most damage. It does look like it came in with a lot of sticky inflations. There were some beats. I don't know. A few people said they were close to in line. Didn't look that great to me. Headline numbers, yeah, they seem to be able to fudge those. But when you look into the core and in the weighted categories, I see sticky inflation. What does that mean? Well, nothing, not great for rates and mortgages and all that sort of stuff, and probably more hikes to come. And that being a great segue, and we'll jump into, I want to show a few more graphs, but there's GDP now at 2.7%. So this is the FedWatch tool. So 76% chance of still getting a 25 basis hike, 50% chance, or 23% chance of a 50 basis hike. If you compare, you start seeing this one. I like this chart. It's kind of hard to see to zoom in because it starts to give you a longer term outlook. Well, these have been moving from out, holding and then cuts. To me, what this reads is at least 3 more hikes and then think about it. Maybe a pause if we're lucky. So that'll be interesting to see how that turns out. All right, should we talk about earnings? I didn't see a ton of earnings that excited me. I know we had Nvidia last week. I don't know if they beat or not. I think they did, but that looks like they jumped. I saw Smash Mouth, the chip sector, go up. This is a tool I don't really need to get into on a quarterly or a weekly thing, but so I checked the sectors on this tool. You can see we're doing pretty good today, a lot of plus 1%ers. So that's what happens when you gap up. This is what I look at quickly when I look at world markets. One I focus on frequently is the DAX. That's we're probably heading into lunch mode there now. So that's a good sign seeing that up. It doesn't show the Kospi. When I jump into my 5 minute, one thing you'll notice, I do follow the Kospi. If you're in my chat group, you'll see I talk about this. That's what's happening overnight. The DAX, which is the German market, you can see they're not done for the day, so the Kospi feeds into the DAX. While those are running, the futures are always, rolling. Well, not always, but rolling around through that. And you can almost follow the Kospi and the DAX, right? Boy, doesn't that look like a bear flag going on there? And then I finally jump into the SPY because I do believe that is the best way to measure the S&P 500. And today you see gap up. Here's our gap, bull flag. So that'll be interesting. Sometimes we hit up here, we'll hit a, put wall, call wall, some sort of gamma thing, and then all of a sudden just sell right off the close. And then who knows, market imbalance, even though that's questionable, might run it back up. So we got an interesting day today. Plus, what do we got for news today? We have next week. Today, durable goods, core goods. Did any of that affect anything noticeable? A little bit. I don't see. I mean, I don't know if it was that. I'll have to do some more research. Sorry, I'm bouncing all over here. Here is it. Pending home sales. I mean, look at that. Forecast 1%, actual 8. So people are buying homes, and that's a month over month. I don't know. Maybe if I refresh this, we'll get some more. No. So what else do we got? Some good stuff coming up. This Case Shiller thing is a big thing for me for a real estate investor. Chicago PMI is probably a good one. One thing I like about the trading view stuff is you can pop these open and chart. Anyway, I'm going to get off this before I run out of time. I don't want to disservice you by going into a bunch of daily stuff, and I don't have time to do daily videos and then review them and publish them yet. Someday. But anyway, so subscribe and like my YouTube so someday maybe I can make enough money to do this. And that's not necessarily my goal. My goal is to make my own money, but I don't mind sharing since I do all this work anyway, and it's kind of fun to share my opinions. And that's all they are. This is not trade advice. I'm not a certified anything. I am actually an old IT guy that is now a landlord and in real estate, and I just like investing. So anyway, the chart we have up now is the IEF LQD, and really what it is a measurement of financial conditions. This is an inverted chart. So green bars are down, red bars are up, and I do that because I overlay this green jobbly jubal, which is the SPX, or another version of looking at the S&P 500. So you can see as financial conditions eased, the market went up. Recently, now these are dailies, we've got a downtrend of tightening happening finally. Some of this hawkish, table pounding from the feds and the rate increase and the federal's terminal rate also is driving some of this down, which is exactly what they're looking for, right? Okay, I just wanted to pop in here to see how much time I had left. 2 minutes. So, VIX. Okay, been running patterns better than I'm used to on the VIX. But I don't know what this is going on here. I'm just going to call it. It looks like the beginning of an upward channel, which would make sense if fundamentals truly do matter or ever will come back in line, or anytime soon anyway. I do expect this to continue to go up. Also with the higher sticky inflation, this could drive up as well. Some of my sub stuff I look at, we talked about a lot of these. Some of these I just use as canary in the coal mine kind of stuff. I do like talking usually about the inverted curve. So if you take a look at this, why does that look all scaled goofy? I think that's something. I don't know what's going on there. That didn't look like that before, but it is truly fully inverted. This is the line of the curve. I don't remember those lines ever being there. Same thing here. Point being is we're very far under the inversion of the yield curve. Oh, I see why it's in percent. Not what is going on. Sometimes TradingView just has a mind of its own, and it's usually when I bounce between charts. Interesting. So that fixed it. Growth to value. So we've had growth through that January run, outperform value, but look at this. This is I don't know if this is a wedge or not, so don't read into my pattern too much. This might just be a sloppy downtrend as value increases over growth, which would make sense because of interest rates going up, growth should go down. The other thing I have here is, well, this is the actual terminal Fed funds rate. And again, I don't know what all of these changes happened on TradingView. This use settlement is closed. I have no idea what that's a new one.